If you're looking to build steady income for retirement, you've probably seen the new OMAH ETF pop up. But the big question is OMAH actually good for a retirement account? Let's break it down. Welcome back to the channel. I'm Doug, the retirement guy with the monthly ETFs. We're going to talk all about the monthly ETFs, dividends, and building smarter retirement income. If it all sounds good, hit that like button and hit that subscribe button so you don't miss out on any future updates. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. The information provided in the video is for educational and informational purposes. If you are going to make any financial decisions, always contact a financial advisor or a professional before making those decisions. So first off, who is Omaha and where did this all come from? Well, it really came from Vista Shares Target 15, their Berkshire Select Income ETF. Vista Shares is a company that puts out ETFs. They really came up with this idea with the Target 15. They're starting to add more funds out there. And what the Target 15 really comes into is their objective is to seek a 15% annual income from which is distributed monthly through covered call strategies on a portfolio mirroring the Berkshire Hathaway top holdings. So the targeted 15 is that they give you 15% annually, and they're doing it through the covered calls. The performance, Omaha's premier appeal is that monthly income through covered calls, especially in flat and down markets. They emphasize income generating over capital appreciation, and not that the fund remains flat since inception, the income offsetting slight losses. So basically what their whole goal is they will do everything they can to attain the 15% annual income. And they're not always looking for heavy growth, but they want to make sure they stay stable in down markets, flat markets, because a lot of their upside is definitely going to be capped. This came out in March of 25. We reviewed it before, and so far we really like it. It's been very impressive. And let's get deeper into this. The forecast that we get from this in the next 3 months, Omaha really is projected to gain. It shows a strong buy consensus from the professionals in the technical indicators that moving average across 5, 10, 20, and 100-day windows are all buy signals. Now, what does that tell you? It means that it is doing what it's saying it's going to do. And they're actually seeing it's holding its ground and with some slight increases moving forward all the way through the 100-day window. There's a 90% confidence range that the projected limited near-term movement is within $19.16 up to $20.01 over the next 3 months. Now that does reflect a sideways trade, which is what we want in retirement. We don't need big growth. What we want is stable growth with a big income. So the trade signals, the technical favors the upside through movements limited to that 1940 and 1950. So what they're really saying here is that between 1940 and 1950, it's got to break through that window to get to those higher points. And that's where it's going to struggle at. It's going to be fighting to get to that 1940 to 1950. It's going to get there, then come down. And then it's going to get there and come down. So it's got to break through that 1950. And that's when they're really saying you're going to see a lot of people taking profits at 1940, 1950. And so we're waiting for new people to get into it to bust it through. We take a look at the holdings, and this is the one thing you always want to pay attention when you do funds and why Omaha is actually doing a very good job. But look at what they got. The Berkshire Hathaway makes up 10% of their funds. Apple pulls in another 9%, American Express 7%, Bank of America 4%, Coca-Cola 4%, Visa 4%. If you look at Berkshire Hathaway's or Warren Buffett's package, you'd almost see identical holdings in the same percentages in the same package as they're doing there. So they're really doing a clone and a copy of what they've done. But because they are doing those covered calls, they're paying a dividend when Berkshire does not. Berkshire believes in just taking the money and rolling it back into the fund to continue to grow, reinvest, and so on. And where Vista Shares wants to do is give that money back. So it's kind of interesting how they're playing it and how they're doing it. So now, so far, what you can see with Omaha is on a very smooth course. Look at this since the April 2nd tariffs, and I'll say this so many times, that's when most every fund out there took its major drop. It came out of it very, very quickly, and look what it's done. It's maintained that par across the next few months. This is why we are really positive about Omaha. It is a steady game player across the board. 1 month, it's up 1.46. 6 months, it's up 0.36. And those 6 months are going to include that April period. So, like I said, they've come out of the bottom. They've come out well. They've done extremely well. And this is what you want to see in a retirement fund. If anything you do, you want to see stable. You want to see this green, and you want to see it, of course, we want to see growth, but you also want to see it fairly flat, but because we want income. We take a look at April 8th, was almost one of the lowest points they had at 1755. Today it's up to 1943. The 52-week low is 1702. So you can see we're about almost $2 above its, I call the low point in April. We're definitely a little over $2.50 over the 52-week low. So we are sitting right in a prime spot for this thing to be riding. The dividend announcements, well, in May, it paid almost 24 cents, June 23 cents, July 24, August 24. This thing gives its average is about 24 cents a month. Now, if you read all the legal documents, if you get into the perspective and really get deep, what they basically do is something I think is, again, unique, and it's perfect for what we're asking for, is they will take the price of the fund on the select day, and they will basically times that, giving you a 15% return annually. So I don't have the math right in front of me, but there's a small little calculator. If you took 15 and divide it by 12, it gives you that number. That's what they times the payment by, and that's what their dividends they pay out for. Now, that's not saying all of their ETF cover calls have made the money, but they have done this every month so far. So you almost know what your next dividend is going to be. If the price stays where it's at, we're staying right at 24. Why is that important? Because you can now know you're going to get 15% at the end of the year. This is why Vista has done so well, but not properly advertised, not properly expressed the opinion of it. They are going to pay 15% at the end of the year, not estimated, not guessed. They will hit the 15%. The fund is built that way. Additional profits of that is covering and putting into the bank. I would expect at the end of the year, they probably will do a special dividend to pay out bonuses. But right now, you can count on an easy 24 cents per month all the way through. So that gives you right now 7.46% yield, and that's only year to date. That estimate's going to be out. Right now, the computer spits out 14.75. We will pick up that quarter point throughout the season. I guarantee it. In 12 months, that number will be a solid 15. So when you think about this, it's almost a set it, forget it, that you're going to get 24 cents. And at the end of the year, you got 15% of your money back. And if the fund stays flat or has those small little growths that we've already looked at, you'll know you'll have the same amount of money you invested in a year ago plus 15% in cash dividend. Now, the return on investment. This is one of these things that we do a lot in the investing side of it, what I call return on investing. You take the dividend, you take the average, you divide it into the share price, and then how long till you get your money back. So basically what we're saying is if you take $19.52 and invest it into this fund and take those 24 cents every single month and put it back in your piggy bank, it would take you 80.95 months or 6 3/4 years to have all your money back. And you can now have a cash cow that just is going to pay you 24 cents each and every month, day in, day out. So that number is extremely high. And for the return on investment investors, this is probably a fund that you don't want to be a part of. But for the retirement accounts, for people wanting long-term income, this thing is perfect because that dollar amount's not going to change. You're going to continue to get that share price across the board. So here's a big one, the assets under management. Now, what does assets under management means is how much money does VistaShare have in the Omaha fund that they can buy shares, they can write shares, they can do a lot of different things with. And as of September 12th, this thing has $500 million already invested into it. This thing is huge. And they've set it up for even bigger and bigger packages because they now have over 25 million shares outstanding. That does not mean all the shares are sold. What that means is they have 25 million shares available for sale that will continue to grow the assets under management without any special deals or any special reports. They already have done that. They have the 25 million out there. And this thing, quite frankly, I think by the end of the year, this thing probably will be at $1 billion. I've watched this from the very first day it was introduced, and it hit the 100 million mark faster. I think it was in the first 30 days, it hit the 100 million mark. And I just feel that a lot of people have missed the opportunity. They didn't know about it. And I just think it's going to be the one that coming in later on, just strong, getting bigger and bigger across the board. So our eyes are completely on a buy of this package. We believe that this is where everyone wants to be in. The assets under management, 495, that means it has plenty of money. It has plenty of aggressiveness to, if they have great times in selling stocks off, they can buy more. If they're doing anything they want to do, change around, if they got to change the program, and Berkshire Hathaway is always making changes, so they want to be on the top 10 at all times, they have the money to do it. The return on investment, as I said, it was 6 years and 3/4. This is not for the quick buyout. This is not one to get in, get out in a year. This is the one set, hold, and forget, let it go. The share prices, I think we have this switch, to be honest with you, but we'll have to change that. But it's 0.36 over the 180 days and 1.46 over the 30 days. Either way, we have natural growth in the fund. You're not going to see this fund having NAV erosion. You're not going to see this fund losing a ton of money. You're not going to see this thing grow a lot of money because the upside is definitely capped. But what they buy, the proper shares, you're not going to see a huge cut in those funds. The income at 24 cents, it's going to give you that 15% return. I don't know of many funds that you can go out there and have the positive 15% return with literally no NAV loss, a positive growth factor, and just set it and go. And this is why we say it's a long-term ETF. You're just going to buy it, set it, collect the money, and watch it go and enjoy your time. That's what retirement's about, enjoying your time, not have to worry about your money. Omaha is taking care of that. VistaShares has done a phenomenal job in doing this. And I'll tell you guys, we are very excited about Omaha. We personally have money invested into it. We have a lot of people that we know that have bought into this. And once you realize what they're doing, that they're almost, I can't say guaranteed, but the way they wrote it in their perspective, and I highly recommend everyone go investigate and do your work on that one. But you will see that they have it preset. They are going to pay 15% at the end of the year. So they break that down monthly. You're going to get your funds on a regular basis. Guys, it's Doug the Retirement Guy with all the monthlies. If you like what we're doing, hit that like button. If you're not a member of our new channel, hit that subscribe. We'd love to have you. Leave any comments that you have. I'd love to hear from you. And as of course, we're always on the Patreon. So our other channel, if you guys are viewers of our other channel, we will be back on within 7 days. A little YouTube issue, but other than that, we are back rolling, and we'll have you for monthlies and weeklies. We'll catch you next time.